Okay, another, next.
Okay, I'm Jerry Choa from Property Company of Friends, Pro Friends normally. Okay, well, I'm glad that well, we're actually clients of BPI and HGC. Okay, and well, I'm also with GK, so that makes me a friend of a lot of people here. But anyway, I'm glad that Toby, well, we've had our days before, but I'm glad that Toby is actually pointing out the role that Pag-ibig should be playing. Well, the nice thing with that period of time when we were together, Mel and Toby, when we were together, that was the time when there was real difficulty in taking out the funds from Pag-ibig. It was coming from an NHMFC bailout, and well, the nice thing with it is that our company decided to put things into our hands. At that time, I was talking to Gigi Montinola. He was still with Family Bank, BPI Family Bank, and of course, we couldn't agree on the credit policies. And well, anyway, we took matters into our own hands and came up with our own lending system. Of course, we were not banks, but we came up with a lending system just the same. And we developed it along the lines of trying to determine whom to lend to without knowing them. So essentially, we started by developing the houses, okay, according to which market profile would actually fit into this. And then we started designing our pricing system so that it would actually reflect certain increments from beginning to end of project time, and essentially it is a time framed, it's a time bound price increase, so that we would actually be faced with a portfolio that at the end of the period we would have a 75% of our buyers that would be able to access the secondary market by selling it out if they lose the job, without having to lose their equity, so that if they lose their jobs in between, they could access the brokers network that we had, and they'd ask them to sell that, and we'd actually provide the financing to the next guy, so thereby creating a secondary market, so that it actually eases up and prevents the piling up of penalties, etc., and therefore it makes it easier to exit the system without losing everything that you put into the house. And we also started designing what kind of a portfolio we'd like to, by trying to know the behavior of the market. At what point would they have to move in? So that we actually were designing a portfolio by designing a subdivision. And we also looked at their expenditure patterns, how much of it was going into the expenditures of tricycle, which is actually a major expense, because in transport, tricycle actually accounts for the largest portion of your transport expense. So by coming up with shuttles, then we were able to reduce, I think, close to 7-8% of their household expenditures daily. We looked into the expense side as much as we looked into how they would be able to get out of difficult situations. The reason that they are poor, the reason that they are difficult clients is because they don't have much savings. And therefore, if you provide for some exit mechanisms, or if you provide, you can also provide certain systems of cash flow warranties. Okay, so there are so many systems that can be inputted into the system. So, and since we were not banks, our biggest problem was actually liquidity and mismatching of our liquidity, because we were building on cash and we were lending on 10. We couldn't do 15. We could do 10. So that was actually the one that we had to cover significantly, and we had to price the interest rate at 18 to 21%, which is significantly higher. So we had to put a wraparound cover through the interest rate. So there were so many designs that were put in, and as we liquefied with the banks, we would actually give them the whole interest, the whole amortization. So if we were borrowing, if we were lending at 10 on a 21, we would actually borrow on, let's say now at 8. So we actually effectively only paid in 4 or 5 years, so that our liquidity risk would actually be significantly reduced, and we would create a wraparound for the credit risk, yield risk, and all. So we actually created a system where if they fail to pay for 3 months or 6 months and we have to buy it back from the bank, we would have cautionary funds in between that, and this can all be designed into. And take note that we did this. We were able to do this only when Pag-ibig wasn't actively playing. So when Pag-ibig was not playing, we could actually do it. But we would have actually wanted the banks to have done it instead. But at that time, since the time lag is too short, the banks were not yet ready to come in. So we came in and we stepped in and we actually developed a portfolio for that. Okay, I'm very happy that the banks are actually in. It was funny because I actually sent Gigi just to prove the point that credit policies were mismatched to the market, that I sent a dozen accounts of immaculately clean payment schedule of 12 equity payments and 24 amortization payments, altogether 36 payments, not 1 day of past due. Sent them 12, and it was a mix of OFW, etc. Essentially the profiling of our portfolio, and we send it to the bank. Well, theoretically that should achieve at least a 9 out of 10. But what happened was only 5 was approved from the 12. So there was a mismatch. So I'm very happy actually now that BPI actually is lending to our clients. Well, during those times, I don't blame Gigi for not having seen that, no?
So this brings up a couple points, I think, right? So one is the government, should it be doing as much as it does, or should it actually be enabling, right? Because what you're pointing out is a situation where the government is crowding out, where the government was very active, you couldn't do your business. The other thing I think you're bringing up is the fact that when legal rights are shaky, when credit information is poor, what careful, prudent bank would actually venture into these markets, right? So there's it cuts in both directions. We want the banks to be prudent.
The nice thing with it is that now our portfolio is 99% collection efficiency, and if it goes at 98, we have emergency meetings.
Okay. Excellent. So next, so any sector now. So I'm
if I can just add one more.
Okay.
Sorry, if I can just add one more. But there's another sector that you may actually look at, which is the employees of the government. And I think credit information is definitely there. All you need is one more item, which is that payroll masters be barred from being able to tinker with the payroll. So if you just remove that small item, you would have opened the whole government bureaucracy to lending, because you would have all your credit information available already.
Okay, good point.